banking sector, which I think by next week we will be releasing a detailed report on banking sector, what is happening and what is to be done. Similarly, on telecom, power, we have already issued a statement on electricity, and we are working on the DISCOM, that is privatization in Chandigarh. So the People's Commission, I forgot to mention one important name, Mr. S.P. Shukla, who was former Finance Secretary, is also in the commission. So the commission is working on various fields related to public sector and public services as a whole. And we will be releasing many more reports. So on this occasion, I thank all the press friends for joining this press meet. I welcome each one of you for this press meet, and also thank you for taking your time. It's a busy time of the day today. And the program is like this. Mr. M.G. Devasahayam is the moderator. And initial introduction will be given by Mr. E.A. Sharma. Mr. Thomas Isaac is not able to join because he is held up in another meeting. Mr. E.A. Sharma will start the brief, followed by Mr. V. Sridhar, who has extensively studied LIC. He will explain the statement to the media, followed by Mr. Amanullah Khan, who was president of the All India Insurance Employees Association and also editing insurance worker. He will be also telling what the organization, All India Insurance Employees Association, on the joint forum, what they have been doing and what they are planning to do. And he will be able to also reply to queries. We will give adequate time for the press friends to interact after the presentations are over. You can raise your questions in the chat box and reply will be given. So with this, once again, I welcome each one of you for this press conference, virtual press conference, and I hand it over to Mr. E.A.S. Sharma. Thank you.
Thank you very much. Can you hear me? I must thank the friends from the press. We are really grateful to them. I know they're all busy right now, but still they have made it a point to take part in this press meet. Now, this People's Commission has been looking at public sector units disinvestment. Basically, there are three important issues. One is the constitutional angle, because the public sector undertakings under Article 12 of the Constitution, they are actually a part of the government. They are deemed to be an arm of the government. So they play the same welfare role of the government under directive principles. Directive principles, as you know, minimize income inequalities, minimize concentration of wealth, and then try to provide justice, social justice to people. There are a number of directive principles. So in a way, the state actually in India, it is a constitutional requirement supposed to play the welfare role, and public sector undertakings which are constituted under Article 19(6)(2). You know, these are companies that are actually created as monopolies originally under the Constitution. And under Article 12, they're a part of the state. So they play the role of an instrumentality of the state. So we find that most of the public sector undertakings which are being sold, there is a legal angle. You are shrinking the space for welfare function to that extent. We feel, and we have legal opinion on this, that prima facie, it is not legal, it is unconstitutional. Now, the second important thing, if you see the budget speech of the finance minister in 2021, the main reason why public sector undertakings are being sold is to generate additional fiscal resources. And of course, they say fiscal resources are required for, again, funding social security schemes, very conveniently. Now, these additional fiscal resources, what are they? If you look at the macroeconomic point of view, every year there are savings in the economy. Households save, corporates save, there are savings. There is a savings pool. And that is the savings pool from which the public sector borrows and the private sector borrows. In fact, the Planning Commission, the erstwhile Planning Commission, used to do a detailed exercise. Can you hear? Hello?
Yes, we can hear you.
Yeah. So in the common savings pool, normally in the Planning Commission, there used to be an exercise where you allot something for the private sector, allot something for the public sector. Public sector is really government borrowing to bridge the fiscal gap. So the same savings pool. Now, what government is saying is, by selling my family silver, jewelry, and gold, which are the public sector undertakings, I'll generate fiscal reserve, which is actually a very fallacious argument, because whoever invests in buying these public sector undertakings indirectly is borrowing from the same savings pool. The only difference is, if government goes to the market and borrows, the terms are much more advantageous because the government has got a sovereign rating. It's a sovereign. Whereas if you go through this public sector disinvestment process, the terms are much, much inferior. And in the process, you are losing title to a very good public sector undertaking, like Central Electronics Limited, which was sold recently for a song, 196 crores. It's a 30-year-old technology institution. All the R&D capital is lost. You are selling it to a very small company, which has no experience in that. So this fiscal resources argument, prima facie, it is a very fallacious argument. Now, coming to LIC. LIC is a very, very unique organization, extraordinarily unique organization. It started with, when life insurance companies were nationalized, 50s. So it was created as a trust company, only with 5 crores of equity of the government. And all the rest of the resources are from the policyholders. The LIC grew in size. Today, if you see the latest financial results of LIC, which are released today, today I saw it in the papers. If you see the figures, they're mind-boggling actually. Their policyholder base is 40 crores. 40 crores means it's 1/3 of the population of India. Most of the policyholders are small policyholders. I'll come to that. Now, the policyholders' premium income is 4 lakhs and more than 4 lakhs crores. That means almost 1/3 of India's tax receipts. And they're sitting on assets valued at 38 lakh crores. And during the pandemic, very surprisingly, this social security cover provided by LIC came handy. You can see by the figures, during the first half of 2021-22, new business of LIC, new policies, business, increased by 554%. That means many people are looking to LIC as a social security cover. Whatever little savings are there, they are liquid. Most of all these policies are backed by sovereign guarantee under the LIC Act, government guarantee. But that sovereign guarantee was never invoked. But the beauty of the company is entire operation, entire activity of LIC is funded by the policyholders. Not a single pie from the government. The banks get recapitalization money from the government whenever there are non-performing assets. But whereas LIC, they just never take any help from the government. So in a way, LIC notionally is owned by the policyholders. Enormous amount of stake of the policyholders. Now, LIC surprisingly funds infrastructure projects and social sector projects of the states every year. In fact, in a state plan, they mention LIC and they say, oh, this is going to be funded by the LIC. So LIC is an agency which funds, like government, the infrastructure and social sector projects. LIC is a very big investor in the stock market, huge investor, and they get income, huge income from that. So now, strictly speaking, LIC, if you want to talk of equity, the entire equity should belong to the policyholders of this country. LIC's policies, if you see, the rural reach is enormous. It's only insurance company, life insurance company, which has got a wide rural, all the private companies, about 24 and odd are there. If you see, they don't have any offices there, mostly urban oriented. Whereas LIC has got a huge network of offices, agents, canvas, and they got policyholders in the remotest parts of the country. The second, the rural reach. The third one is, if you see the average size of the LIC policy, it is very small compared to a private company policyholder. That means LIC is covering all the small policyholders, the disadvantaged sections of the country. That is the beauty of LIC. That's why it's a social security cover. This kind of a company, it should really, if anybody with some kind of compassion for the policyholder has to, what to do it, the entire company, the equity must really belong to the policyholder. What the government is now doing is, they originally it was 5 crores, they increased it about 100 crores some years ago. Now they increased it about 25,000 crores authorized capital. I think today the capital is about 6,000 crores or something. And they're throwing it open in the stock market so that the investors could bid for it. The only window that is provided for policyholders, that too after a great deal of public criticism, was only a measly 10%. Whereas it should belong, the entire thing should belong to the policyholders. Now, the stock markets in India are very shallow. Only 3% of the stock market are retail investors. Now, what will happen when you offer this equity? They'll buy. Imagine a Boeing 747 aircraft, huge aircraft. You take it to a street vendor and say, "Can you value this?" How will you value it? He has no idea. This is what is happening today. We are asking stock market investors to value the worth of LIC. They have appointed a stock market consultant, advisor group. They are actually trying to value LIC. What they are doing, LIC has got properties all over the country, across the country. Now you have to see the market value of each land holding. Now, how do you value these policyholders' goodwill? See, the LIC survives on goodwill and public trust. How do you value that? Now, all this, and what type of social security cover in this country? There is no other social security cover other than LIC. Now, how do you value that? So, normally when you value something, it is valued from my point of view. It is valued from the point of view of a stock market investor. It is valued from the point of view of the nation, the society. So strictly speaking, in my view, one should look at the social value of LIC, which a stock market investor can never do. Now, this is what is happening today. The government will now throw it open to the stock market. The stock market investors will bid, and they will buy this equity. And the moment the stock market comes into as an equity holder, they will alter the character of LIC. LIC's objectives, one of the objectives, if you see the website, is to reach out to the rural areas. They will say, why should they reach out to the rural areas? We're all investors. Our only objective is to maximize our profits, and we can't maximize profits. So we'll, completely change the character. Now, today, the income that comes from policyholders, the profit, that is shared in a ratio of 95 for the policyholders and 5 for the government. I think they recently reduced it because of his IPO and all to 90 and 10. Or 90% goes to policyholders. The moment the stock market investors enter as equity holders in the activities of LIC, they will say, why should we give 90% to policyholders? Because the policyholder has no say, because he's got a small percentage in the equity. So in a way, the moment you list it in the stock market, the moment you allow some of this equity to go to investors who are driven entirely by the profit motive, the character of LIC will change, and all the social cover, social security cover, which we are providing for the people during the pandemic, many people depended on LIC securities, LIC relief they got. So all that will slowly vanish, and the government can never substitute such an excellent social security cover. Our forefathers have really created this with a great deal of vision. Now this is going to work. So we feel, one, the valuation methodology is wrong. The social benefits of LIC should be perceived. Two, to expose it to force LIC to be listed in the stock market and to throw it open for stock market investors. You see, if you see the LIC Act amendments recently, the government will retain up to 74% for the first 5 years in the equity. After 5 years, the government equity will come down to 50%. Slowly, 51%. That means 49% will go to the equity holders. So over a period of 10 years, you can see that LIC's character is going to undergo a drastic change. And LIC will now become like any other company, and the policy holders will no longer have a say. And the objectives, the social objectives of LIC will completely get altered. And even the sovereign guarantee, which actually is given to the policies, over a period of time, the sovereign guarantee will go away. And the policies will lose that kind of value which is there. So we are, as a commission, we discussed it at great length. We have actually taken evidence from LIC trade unions, LIC, others, economists, and the people who understand the LIC, the social security side, we have analyzed, have issued a very detailed statement. The press brief, which is circulated to all of you, has some of these essential points in this. So I thought we will brief all of you, because ultimately these ideas have to go to the press. You know, how many policyholders know what is happening today, the listing and all that? They don't understand what is happening and how they're losing out in the process, who contributed to the growth and the prosperity of LIC. They contributed to the dividends, huge dividends LIC paid over the years to government. All this because the policyholder is not accessible. Even the valuation methodology is totally non-transparent. We don't know how they're doing it. See, after all, in democracy, all these things should be transparent and it should be visible to everybody. That is not being done. So this will probably, the IPO will be issued in the next 1 or 2 months. They're in a great hurry. And look at this. You sell a family's silver, jewelry, and gold. For what purpose? You get money and you use it in 1 year. See, when you sell an asset, you have to create an asset. Simple accounting logic. Whereas they're selling an asset and they're using the money for 1 year consumption. And that money, 1 year consumption can go into all kinds of non-productive expenditure, which have no really social value. A lot of flab is there in government expenditure. In fact, the government today, if you see the Oxfam report and some studies recently, the income inequities in India have widened quite sharply, especially after the pandemic. Many corporates have doubled and tripled their incomes, whereas the people in the unorganized sector have lost their occupations. I know, I see them. Maybe a roadside barber, a tailor. I've seen an auto rickshaw wala idling his auto. I've seen a small taxi wala. His taxi is, one taxi wala in Andhra Pradesh committed suicide because there's no business. And he has to pay the taxi loan, he is paying all the EMIs and all that. He has no money. And I had to intervene and then write to the government, but nothing happened because they're all done by the NBFCs, non-banking finance issue. They just don't listen to anybody. They're not regulated. So these are the people who have lost out in this process. And many of these people, they have to pay electricity bills, small electricity bills, but they can't pay. They don't have income. I work in the slums in Visakhapatnam, and I see, I'm in touch with all the families and the type of trauma to which. So that is the kind of income inequities have widened during the pandemic. And this is a time when government should raise the fiscal resources, not by selling their family silver, all the publicity undertakings, but by having redistributive taxes, wealth tax, collected from the corporates and use it on the social security. That kind of taxation is important. I hope some wisdom somewhere prevails, and this current budget, they will take care of it, but I don't know. I don't know whether, unfortunately in India, let me be very frank with you, the corporates finance the political parties. I have filed a case in the Delhi High Court against Foreign Contribution Regulation Act violations. And we won the case right up to Supreme Court. But what did the government do? The response? We said, look, don't take foreign contributions, foreign company contributions for political electioneering and all. And what did the government do? They retrospectively amended the Foreign Contribution Regulation Act from 1976, which in my view, prima facie is not legal. So I challenged it to the Supreme Court, but the case is there. I hope it will come up sometime. So basically there seems to be a nexus in this. I think we have to talk about it. Nothing opaque about this, nothing secret about it. These are all there, contribution reports to the Election Commission. Electoral bonds, can you imagine, they are completely non-transparent. So I think these are some of the dimensions. So I leave it to Mr. Sridhar, who has studied this in great detail. And he is actually instrumental in developing the statements which have issued. So I would request Mr. Sridhar to take over. Thank you very much.
I'm no expert on either insurance or the Life Insurance Corporation. I owe much to the unions with whom I have engaged over the last 30-35 years. And in particular, I owe a great deal to my fellow speaker, Mr. Amanullah Khan, for educating me about the intricate details, the scale and scope of what this institution is. Sometimes we sort of we take for granted that is something that is we see every day, and that is true of the LIC. A lot of people don't appreciate or understand well enough the work of this unique corporation. Nothing like it exists anywhere in the world. To those who say that the government or a public institution is incapable of being innovative or enterprising, LIC is the answer to this. I mean, no other brand in India is as well known, as recognized across the length and breadth of this country like the LIC is. Its simple logo and its slogans are a household name in India. How did this happen? I mean, how did this come about? In 1956, and for this we need to understand a bit of how unique this company is. Mr. Sharma mentioned about how it is different, but I mean, to understand the complexity, for that we need to appreciate the working of life insurance as a business, very different from banks or other financial institutions, in the sense that they are long-term contracts. That is, you enter into a life insurance contract over a period of 20, 25, 30 years. There is a risk to this for the insurer, because it is very difficult to forecast how you will deploy your investments over such a long period of time, given the uncertainties of the world. But the flip side of that, the other side of it, the advantage of that is that these can be deployed in long-term investments, things like infrastructure, government loans for projects, and so on. And so you match your duration of both the assets as well as the liabilities, and so reduce risk. So this is basically the working of the life insurance corporation. Now, when Nirmala Sitharaman, Finance Minister Nirmala Sitharaman, announced in 2020 during her budget speech, the budget which was washed away in the pandemic, she made this cryptic announcement that LIC is going to, we are going to disinvest in LIC. Just one sentence in the budget speech. It sent shockwaves, because the question to ask was, how can you sell something that you don't even own? LIC was not even a company as we understand it. A company is shareholders hold a stake in a company and they control the company. The controlling body of shareholders, a group of shareholders or working, they control the company and they have first charge on the profits. Unlike this, in the case of LIC, apart from the 5 crores of equity that the government invested in 1956, not a single paise has come from the government. Every investment, it's like LIC was like a perpetual machine, that it was, once it was started, it was completely, it was being run by policyholders' funds. And mind you, we didn't have a regulator. We didn't have an insurance regulatory authority to control it, or direct it, what to do, how to do. Everything, LIC was itself its own regulator. And by all accounts, there has not been a whiff of a scandal in LIC in these 6 decades. Truly remarkable. You can't find another institution like this anywhere in the world. Now, the fact that 95% of the surplus, not profits, surplus that is generated every year was distributed to policyholders said something about the character of LIC, in the sense that it assured policyholders. So it was more than just life insurance in that sense, in the sense that it assured policyholders of a savings instrument which was safe, secure, and guaranteed over a long period of time, say 20, 25, 30, whatever the duration of the policy is. And it has never failed to distribute these bonuses. So this is the unique character of the thing. So how do you sell something that, yes, technically the government, by virtue of its 5 crore holding until 2011, when it was increased to 100 crores, and mind you, even this 95 crores of additional equity was provided by policyholders. It was just a book transfer in the name to the name of the government, but actually the funds came from policyholders. So how do you sell something? I mean, technically the government may be the sole shareholder, but ethically, morally, and in any other way, I mean, how is it fair to sell off something that you don't even own? So this was what had happened. Now, subsequently in 2021, through the Finance Act, mind you, again this was another instance of the government using the finance bill to avoid discussion in Parliament, and significant changes were made to the life of LIC for its very existence through the Finance Act. It made it one of the things that it did was made it comply with fall in line with the Companies Act. So it had a board, it had an audit committee, and all of those things which characterize a company. But it also reduced the share of profits distributed to policyholders from 95% to 90%, although LIC still continues to pay 95% of its thing, even after this change. According to sources inside the life insurance LIC, this is already going to be changed to about 92.5 and subsequently to 90. This might seem like a small percentage thing, but as from Mr. Sharma, as he pointed out, the scale of its operations are huge. It covers every single price point in the insurance business, from small people like small policyholders like the rickshaw puller and the auto driver and the taxi driver that Mr. Sharma was mentioning, to people like you and me, people who are wealthier. It covers every single thing. Now, that is the scale of its operations. Its assets. Do we know how much LIC is worth? LIC doesn't know. The reason is simple. A life insurance business, traditionally, I mean, I say traditionally because LIC is a traditionally run life insurance business, unlike the many unstable ones in the West, which we are trying to copy. Traditionally, assets were valued at book value in order to ensure that you made a conservative estimate of your assets so that you had enough solvency to meet the claims that may arise in the future. So LIC never had to estimate how much it was really, it never had to brag about how much it was worth. It never had to do this assessment. So now I come to this thing about how the government has gone about the disinvestment process itself. And the process is very important. The thing is, this is a recent development in the world of insurance. It is probably not even 2 decades old. This concept of embedded value. The embedded value, what is the value of a life insurance company? For LIC, in its existing avatar, it never required to know what its value was in the market, what we call the market, simply because it didn't matter. But during the 2000s, especially in the 2000s, and particularly after the 2008 financial crisis, a string of collapses and mergers and acquisitions happened in the West, particularly in Europe, and of course the AIG in the US and several others. Now, when that happened, you had to value the assets of these companies that others were trying to buy. So this concept, this notion of embedded value arose out of a particular situation. Now, what this government has done is handed over, I mean, it is almost like a curbside deal with a small private actuary consultancy based in the US. It's called Milliman. Now, Milliman has been asked to estimate the embedded value of LIC. I did some research on what this embedded value is, what this creature is. And it's very interesting that you can have an embedded value today, you can have an embedded value tomorrow, and you and I may have different embedded values. Two different actuaries can have two different embedded values, depending upon the methodologies adopted, the assumptions made, and so on. So there is nothing sacrosanct about the embedded value. Now, why I'm talking about this is because the LIC IPO is structured this way. The government, the first step is to estimate the value of LIC. So if you want to sell a portion of this giant, you need to know what the value is. So in order to sell it. Now, so the first step is estimating this embedded value. Now, this embedded value it has no sanctity at all. Apart from that, it doesn't include goodwill. And most important, the embedded value is on the existing business. None of these assumptions that are made by a so-called expert Milliman has no expertise with dealing with a company like LIC because no other company like it exists anywhere in the world. So in the peculiarities of this company, the uniqueness of this company are completely ignored in this thing. So goodwill is not included in embedded value. We don't know if the government is also imputing a goodwill value to it. But the important point to note is that this is an utterly non-transparent process. How this valuation is being done is completely unknown. Was sold at a ridiculously low price, which became evident the day it was listed. Which means basically the prices shot up, violently, and which meant that obviously there was a loss to the exchequer. That means the price of the share had been grossly underestimated. This is not an idle fear. I mean, it's a very real thing in the context of what has happened with Central Electronics. Even this government has been forced to put this on hold because of the controversy over this entire valuation. And every single instance of privatization, in the last 20 years, every single instance has been shrouded in controversy because of this valuation problem. Balco was a most striking example in the initial days of the Vajpayee government, the first big ticket privatization of Indian public sector companies in India. And so controversy continues to haunt the entire privatization agenda. Now, one of the arguments being suggested is that, okay, it's just a 5 to 10% dilution. How will it matter? The answer to that lies in the changes made to the LIC Act through the subterfuge through which the Finance Act has been used to make changes to the LIC Act. This 95 to 90% is one thing. Now, reducing this to 95 from 95 to 90 may appear to be a small change, but it is a huge. It will cause problems, because what happens to policies that are already running? Policyholders, millions of policyholders have bought policies for which they were assured, and they worked under the assumption that till the end of the tenure, it will be 95% of the surplus generated from generated by LIC will be paid back to them as bonuses. Midstream, you're changing it, reducing that. So it amounts to shortchanging the existing policyholders. Now, the other, Mr. Sharma mentioned about the fact that the LICs average about the ticket size of policies of LIC as compared to its private counterparts is much smaller. That is natural because, I mean, LIC caters to a cross section of the Indian people, whereas the private insurers cater to a very narrow segment of the demand. So the average ticket size of an LIC policy is about 16,000 rupees. Compare that to a private insurer, that's about 90,000 rupees. So that's the difference. So when you say policy holders, one of the other arguments is that a portion of this float will be reserved for policy holders. I think it's not even clever. It is, I mean, it's positively evil if you ask me, because if the average ticket size of an LIC policy holder is 16,000 crores, 16,000 rupees, you can imagine the average LIC holder's ability to participate in the market to buy this stock. So this float is basically amounts to shortchanging the. So in contrast, his share of the surplus that he is eligible for gets reduced. An average policy holder stands to lose much more through this than through standing in the queue for a lottery, which he may never get. So this reservation for policy holders is nothing but a bait, to entice people to pretend that this is shareholder capitalism where, public can participate in buying and so on. Whereas policy holders as a class are going to be cheated because of these changes. Now, the other changes in the LIC Act are also very significant. The reduction in stages to over 51%. Mind you, even that 51% is not sacred. After all, we were promised that it will be only 26%, and now look where we are in the insurance sector and in the telecom and every other field. So these can be, there's nothing sacred about this 51%. So when that happens, at 10%, anybody holding 10% are eligible to 2 nominees, 2 directors on the board. And there will be 9 independent directors. Now, which means that the direction which LIC takes in the years to come is going to be significantly changed. And this reduction in 95 to 90% may have serious consequences for the competitiveness of LIC vis-a-vis its private players, because sooner or later, private players are going to demand, because private players are already have 10% of the surplus as their own. They are entitled to 10% of the surplus, unlike the government, which gets only 5%. So these private companies are going to lobby the IRDAI, which has been used to, mind you, the conduct of the IRDAI itself has been suspect in all these years of its operations. I mean, I don't want to get into that because that's a long story, but over the years, many of its changes have been particularly harmful for the LIC, including, I mean, I'll just recall in 2014, it made this completely arbitrary, thoughtless, reckless decision to withdraw all policies, and which caused havoc, particularly for LIC, because it was the single biggest life insurance company. Now, I just want to close with what will happen to insurance as we understand, and what will happen to not just life insurance, not just to LIC, but to insurance itself. Insurance, unlike other financial products, is basically a defensive investment, in the sense that you want to protect, and life insurance particularly, is that basically you want to protect your loved ones in the case of an unfortunate event. And so this is primarily that. Again, here, if you look at what the operations of the private insurers, 80% or 75 to 80% of their LIC, their insurance policies, life insurance policies, are in ULIPs, These are basically linked to the stock market, in which the insurer bears no risk at all. The entire risk burden is on the person who's getting insured. And these mirror the fluctuations of the stock market, and the risks are entirely borne by the policyholder. Contrast that with LIC, which doesn't do that. It stays away from it doesn't do ULIPs. It's a very small, insignificant fraction of its operations. So this is the nature of the existing business and how it's operating. But what will happen over time is that these two changes, particularly this reduction in the share of policyholders' surplus that they're eligible for, and the sovereign guarantee. This sovereign guarantee has never been invoked, but it was instrumental in guaranteeing, in ensuring that LIC's policies were backed by the strength of the state. And that's very important, because I mean, you buy a policy and the unfortunate event may happen after 20 years, but you want to know that the guy will be around when that happens. And so the sovereign guarantee was a very important part of this, and it helped in developing the culture of insurance. It should not be looked at just as something to do with LIC, but in promoting insurance, the spread of insurance culture, and this access to a defensive investment option for large sections of the people who are not in a position to take risky steps. And so that is likely to be jeopardized by this whole thing. And so it is not just LIC, but the nature of what will happen to life insurance will be under threat. And this is very important, because in India, there is no state-backed social guarantee at all. And so something like the LIC, which has structured policy for every conceivable income class, has been a very important thing. Now, over time, and because of its spread, it has been able to cross-subsidize the policies of the poor with those of the others, and through prudent management of its assets over time, it has been able to balance these objectives. Now, now there is also a portion of the equity that is being set aside for foreign investors. Now, foreign investors and private investors, if they get control over the direction in which LIC takes, these are going to suffer, and these are will be obvious targets for elimination. And then already we are seeing a decline in the insurance penetration in India, that is defined as the premium as a fraction of national GDP. Now this has been coming down, and so this is really the danger, that you will expose a large section of people who are underprivileged, who are unable to participate in insuring themselves, and they are going to be thrown back outside the system of insurance. And so the threat is not just for LIC as an institution, but for insurance in India, and that will have very serious ramifications for everybody. Thank you so much.
Yes, Sridhar, can I speak?
Yeah, please.
Please proceed.
Yeah.
Comrade
Thank you, Sridhar.
Amanullah Khan. Comrade
Yeah,
Amanullah.
I am Amanullah Khan. I'm the former president of All India Insurance Employees Association. Thank you, Sridhar. You have been very elaborate, and you have given lucidly the contribution of LIC for the national development, and also why it is necessary that LIC must remain a 100% government-owned company. The trade union movement in LIC has been campaigning against the Malhotra committee recommendations for the last 26 years. The Malhotra committee recommendations are in two parts. One, it suggested that the insurance industry should be opened up for private competition. Second, it also recommended that LIC and the general insurance companies, 50% of their shares should be sold into the market. So in essence, the Malhotra committee was recommending the privatization of LIC and the public sector general insurance industry. So we began our campaign from then onwards. Successive governments tried to implement the first part of the Malhotra committee recommendation, open the industry for private competition. But nobody dared to talk about privatization of LIC or the privatization of the public sector general insurance companies, except the present government, which has decided to go for an initial public offering, which the trade union movement in LIC considers it as a first step towards privatization. The government has already got the parliamentary sanction to reduce the stake in LIC to 49%. And we know that it cannot remain like that for all times to come. As it is happening in the bank, where there is a proposal that in the public sector bank, the government stake should come to 26% from 51%. Such attempt is going to be made in future for LIC too. And that is the reason why we have been opposing and campaigning against this policy of LIC IPO. The report of the commission is a very nice document. Our opposition against LIC IPO finds reflection in the report of the commission. Mr. Sridhar and earlier to him, Mr. E.S. Sharma, they have also spoken as to why we should oppose the LIC IPO. I do not want to take much of time to explain that. But basically, there is no transparency in what the government is doing. The government brought the amendments to the LIC Act, 27 amendments, through the finance bill. The trade unions in LIC wrote to the Prime Minister, Finance Minister, and Speaker of the Lok Sabha that this is not correct. You are deciding the future of the biggest financial institution of the country, and therefore you have to de-link it from the finance bill. And if you want, you bring a separate bill to amend the LIC Act, refer it to the Parliamentary Standing Committee, invite opinion from all the stakeholders, consult them, and then let there be a national consensus as to what should happen to LIC. Unfortunately, there was no response from any of these constitutional authorities. They did not bother to reply to us. And they brought these 27 amendments, and these amendments mostly deal with how the LIC has to operate after the IPO hits the market. So management, how the management has to be there. These are the major amendments. But two very important amendments are, number one, it changes the character of LIC. From the corporation, the LIC has been made a company. Now LIC will not enjoy the status it had earlier as a corporation. It will have to be governed by the Companies Act. So that change has been brought about. The second change is the distribution of the surplus, which LIC arrives at every year. Mr. Sridhar has explained it. I do not want to go into that detail. But the third most important factor is that the character of LIC is that the government at the time of nationalization itself said that LIC has to act as a trust. And therefore, the trade union movement has been campaigning that LIC is a trust or a mutual benefit society. After the initial capital of 5 crores, the government did not infuse any additional capital, as Mr. Sridhar pointed out. The entire expansion of LIC, building up of the assets, has been done through the policyholders' funds. And to drive home why the policyholders are the real owners of the company, I want to bring one more important fact that has been amended, is that out of those 27 amendments, one amendment deals as to how to treat the profit LIC earns from a non-profit policy. LIC sells both with profit policies and non-profit policies. And with profit policy holders, they share not only 95% of the profits that are generated from their policies, they also share 95% of the profits that are generated from the non-profit policies. And incidentally, if there is a loss in the non-profit sharing policies, these policyholders share that loss also. And that makes it very clear that the policyholders are the real owners of the life insurance corporation. So we have asked LIC, tell us on what basis you are valuing the LIC. But so far, LIC has not discussed it with the trade unions. They have not discussed it with the agency force. They have not discussed even with the policyholders council. Incidentally, LIC is the only institution which has got a policyholders council. And these policyholders councils at the zonal level and the central level are headed by the retired judges. A district judge at the zonal level and a high court retired judge at the central office level. So even those processes have not gone through. No discussion has taken place. Now we are raising certain questions that we want to know how the valuation of LIC is being done. Valuation has to be done in different methods. One method is called as the dividend method, as to how this dividend, 5% dividend which we are giving it to the government, which has been growing at a rate of around 14%, if it continues to grow like that, what could be the value of life insurance corporation? The second thing is that what about the valuing LIC through the present value of the future profit of the existing businesses? What about the businesses which LIC is going to get around 12% growth LIC has been registering? What happens to that kind of valuation? So we are not knowing anything. There is total dark. And more importantly, everybody recognizes that LIC field force, 13 lakh agents, is a gold. Because even today, 88% of the policies that LIC sells are being sold through individual agents. Compare this to the private sector, where around 70% of their policies are sold through the banks, through what you call as bank assurance. So LIC agents, what is the value of the LIC agency force? What is the value of the goodwill? Nothing is known. Another important factor is that when the entire corporation has expanded through the policyholders' money, the value of LIC's assets at present is much more than the value of its liabilities. What happens to that? Are you going to give that money to the existing and the past policyholders, or pass on that wealth of the policyholders to the new shareholders? That is a very important question that needs to be asked, because a rough estimate says that the life fund, which is the liability of LIC, is much less than the assets that the LIC owns. Second factor is that for any insurance company to expand the business, you had to infuse the capital. The owner has to infuse the capital. But here the capital has been infused by the policyholder. Today, LIC has got a solvency margin of 1.76%. And if you translate into money, according to the IRDA, it is around 1,86,000 crores of rupees. This is the solvency margin which the government should have infused in LIC. But this is the solvency margin which has been appropriated from the policyholders' funds. With the understanding, when the policies mature, the policyholder will get back their share from the solvency margin through the final additional bonus. So these are the issues that need to be addressed. How the excess of the assets are being dealt with, how the solvency, whether the government will infuse that capital to release the fund of the policyholders. So on these issues, no answers are coming from the government. So as a trade union, we have decided to oppose it. We have been campaigning. We have contacted almost around 500 members of the parliament from different parties. Unfortunately, we get the same stock reply that we agree with your argument. We know LIC is too important to be privatized, but ultimately we had to go by the whip that is issued by the parties. So this is the democracy that we have. The second, we have been reaching out to the trade unions, distributing the pamphlets, holding conventions across the country, state level conventions, trying to mobilize the opinion of the people in favor of our struggle. We also reached to the policyholders and we have been explaining what impact it can have on their future when the bonus rate is reduced, what impact it can have, and what happens to the additional assets which they have funded for the expansion of the LIC. With that question, we are also reaching out to the policyholders. We have decided to go on a 2-day strike on 23rd and 24th of February, along with the other trade unions in the country, to oppose the LIC IPO and the privatization policy of the government. And we are in discussion with the other trade unions in LIC to develop a series of program of actions, including the strike action, before the LIC IPO. We expect that the LIC IPO may come on in the first week of March. And we have decided from my organization that on the day the LIC IPO is going to be listed, opens up for subscription, LIC employees will go on a 1-day strike in protest. And we know that the battle is not going to end with the LIC IPO, it is going to continue further. And we are preparing the organization through a public campaign and through educative campaign to take the fight to the government. And this is what the trade union movement has been doing it. Now, finally, what impact it can have on the national economy. The simple thing is that LIC was created with a motto and the slogan, people's money for people's welfare. Whether after the IPO, whether the same thing will operate or not. Because we are sure that the business model of LIC is going to undergo a change. In the sense, the LIC has to concentrate not just on the social benefit for the nation, but on, more importantly, to generate profit for the shareholders. And when you try to generate more profit for the shareholders, naturally there is going to be certain impact. What kind of policies LIC is going to sell it? Which sections of the people LIC is going to target? Whether rural areas are going to be neglected, whether smaller policyholders are going to be neglected. These are the issues that have to be built in the campaign. And we see a real danger because the whole business model of LIC is going to change to deliver better value to the shareholders. So we are campaigning on these issues, and we hope that the people of this country, the progressive sections of this country, is going to support our campaign. With this, I rest. And if there are any questions or clarifications, we'll take it. Thank you.
Has ever been considered by the government. And as you see that LIC IPO will constitute a breach of trust, public trust. It is a breach of policyholders' trust openly. And basically policyholders are being swindled openly. Their stakes are completely ignored by the government. And the government is taking unilateral decisions in these matters. Now, I was going through the questions here. If you can post your questions in the chat box, that would be very good. But one question which I have seen, I would like to just react to it, and then I'll request Mr. Amanullah Khan and Mr. Idar also to respond. This is about the money bill. Now, I was a part of the government at one time. I have seen money bill being misused, but in a very, very limited way. In the last 7 years, I have witnessed the money bill, the budget bill, being misused extensively for all kinds of unsavory things. Actually, the government's intent on functioning in a highly non-transparent manner. Now, the moment you bring it into the money bill, the Finance Act, the Rajya Sabha is out. In fact, there is a case pending in one of the courts, I think Delhi High Court or Supreme Court on this, whether that is legal or not. It will take a long time. But what the government is doing is, whenever they don't want any discussion, and this particular government is very good at that. They don't want any parliamentary discussion. They do not want any public discussion. They do not want transparency. They forget that transparency is a requirement under Article 19 of the Constitution. Right to Information Act has come under that. Not because of any governments, it's only Supreme Court's interpretation. Now, in the money bill, what happened in the last several years, I was a victim, in a way, in the money bill. As I mentioned to you, the Foreign Contribution Regulation Act, where all political parties are taking money from foreign companies. And I questioned it in the Delhi High Court. Now, what happens when I win the case in the Supreme Court? Conveniently, they use the money bill, the backdoor entry, and they amended the Foreign Contribution Regulation Act in 2 stages, two money bills, and they completely retrospectively amended it from 1976 onwards, just to permit political parties to accept company donation, foreign company donation. Can you imagine? Have you ever seen a government amending an act to permit it to take foreign donations? There cannot be anything much more anti-national than this. Now, when this happened, of course, I've challenged this. It will take some time in the Supreme Court. The case is pending. Earlier, electoral bonds were introduced. Now, what are electoral bonds? Nobody knows who donated the money. Nobody knows who got it. And total non-transparency. And this is a government which talked of transparency. If you see the Prime Minister's PMO, Prime Minister Office website, transparency is big letters. There's a transparency in functioning governance. But here, the electoral bonds were completely non-transparent. And the money bill was also used to, there used to be a ceiling on company donations for political parties, 7.5% in the Companies Act. They removed that ceiling. And in every way, they've used this money bill wrongly, they've misused. And the basic idea is that you do not want to have a parliament discussion. In a way, using the money bill is to bypass the parliament. You want to bypass the public. You want to bypass the parliament. You see the PM Care Fund. When somebody asks for under Right to Information Act, what are the details of PM's care? No, this is a private one. It doesn't come under within the purview of the PM Care RTI Act. And who are the people who chair the trust, PM Care Trust? Prime Minister, Finance Minister, Defense Minister. Who administers the trust? Prime Minister's office. Who gives the reply under Right to Information Act? It is the Prime Minister's office under section. And still they say it is not transparent, we will not give you any information. So this is the kind of thing that is happening. I think this is a matter on which the public have to question. All of us have to question. Now, one important thing I want to say is, among all of us speakers, among the press, among all those who are participating in this meeting, many of us are LIC policyholders. Basically, we've got a stake in this. As I mentioned, if you see the base, policyholders base, 40 crores. 40 crores means 400 billion. It's about 1/3 of the population of India. And in a way, the government is actually keeping all these 400 million people in the dark. And they're placing their savings and their funds at the disposal of investors. Now, imagine LIC is like a machine. It mobilizes savings, household savings, that to small households, like a machine. And it is operating that. As explained very well by Mr. Sridhar, long-term, long-term funding, long-term. So this particular amount, the entire savings now are going to be kept in the hands of private investors, including foreign investors. Can you imagine? You're giving control to foreign investors on domestic savings. I think these are matters of very serious concern. I would request Mr. Sridhar and Mr. Amanullah Khan to add to this money bill issue. If there are other questions.
Just three points on this money bill thing. One is, note that this money bill is the Finance Act of 2021 basically modifies another act, another piece of legislation, which would otherwise be required to be passed by Parliament, be amended by Parliament separately. So instead, what it does is that it issues, and in the Finance Act, there are many things in the Finance Act. There are chapters in the Finance Act, among which the LIC incidentally occupies a very large portion of the last Finance Act. On the 27 counts on which these modifications have been made. Otherwise, the government would have to make changes to in the normal course of event. What would have happened is that the government would have had to come with a bill to amend the LIC Act or the Insurance Act or whatever the legislation is, and make those amendments, and because it is a specific legislation that is being amended, it would have to undergo much greater and closer scrutiny by Parliament or Parliament Select Committees or whatever. So there is a parliamentary process of scrutiny which is bypassed by this money bill. Secondly, this completely avoids the need to go through the Rajya Sabha, which is another major thing. And thirdly, there is absolutely no discussion on this at all, because nobody notices the Finance Act. The Finance Act comes after the budget presentation, and it is generally lost in nobody reads unless you are a specific company who are interested in the specific provisions of the Finance Act. There is very little attention paid. So these major changes made to the life of one of India's biggest institutions through a backdoor method is completely repugnant. And I close there.
Mr. Amanullah Khan, would you like to say something on this?
No, see, the government may justify that it is a money bill for the reason that the capital has been increased from 100 crores to 25,000 crores. But the budget does not make any provision for increasing that capital. So that is one thing. The only thing which the government has done so far, it has not taken the share of its surplus for the last 2 years from LIC. It has asked LIC to hold it back. So when it is necessary to take it as a capital. Now, the whole issue is that the government wanted to avoid a debate in the public and debate in the Parliament. And that is what we feel so sad that the future of the biggest financial institution was not even discussed on the floor of the parliament. If the LIC Act had been brought separately, there would have been a lot of discussion in the public, the nation, and in the parliament also. And that would have given an opportunity for the public to place their views before the parliamentary committee. To avoid all that, the government has done this. Just to give one example, for the general insurance, to take away the class where the government committed that we'll retain 51% of the shares, they brought a separate legislation. And that legislation itself had so much of problem for the government. On that legislation, they had to suspend 12 members of the Rajya Sabha for a whole session. The government knew that if they bring the LIC Act separately, what opposition it is going to face. To avoid that, they surreptitiously brought it in the finance bill and got it approved through the parliament.
One important point to add to what Mr. Amanullah Khan and Mr. Sridhar have mentioned. Just look at the way LIC life insurance was nationalized. You look at the parliamentary debates at the time, heated debates, very elaborate discussion. There are arguments both ways. And after a great deal of discussion, that nationalization LIC Act was passed. And today, compared to that, the IPO, no discussion at all. What two different eras. There was an era when there was democracy at its full height. And today we are afraid of democracy. As somebody said, there's too much of democracy. I think we mentioned in our report also, People's Commission. So I think this is something where, as the people of India, we the people who are the authors of the Constitution, drafted by Dr. Ambedkar and all the other elders. And today, the people are kept out of everything, unilateral decisions. You know, you look at the public sector disinvestment policy, latest, which was announced by the finance minister in 2021 budget speech. December, they issued guidelines. You know, you'll be surprised, in the next 2 years, they want to completely dismantle the public sector except a few. And all within time bound. And if suppose some chairman and managing director of public sector undertaking says, no, there are implications, he'll be removed, sacked without any notice. And the ministry official will take over. I mean, what kind of orders are these? If you are interested, you can read this, our reports, we have got it out. So I would now request you to post your questions, and then Mr. Sridhar, Mr. Amanullah Khan, and to the extent I can, will respond.
Yeah, there is one question.
Yeah.
We say that post LIC IPO, what would happen to the solvency margin? Yeah. I think the solvency margin depends upon the business premium income that we earn. Today it is 1,86,000 as at the end of 31st of March 2021. As the business increases, the amount that you have to earmark for the solvency also increases. Now the question here, what I raised is that this entire 1,86,000 has been funded through the policyholders' money, with the promise that as policyholders, as the shareholders, they'll get back their amount when the policy matures in the form of a final additional bonus. Now the question is that when your LIC IPO is coming, whether this amount is going to revert back to the policyholder and the government is going to infuse, as the new shareholders are going to infuse that capital, is what we want to question the government, ask the government. And the government is not clear on that. No answer is coming from the government.
Just one additional point. In fact, this whole solvency margin business, I refer to the role of the IRDAI, and the regulator was instrumental in bringing about this issue of this solvency margin, prescribing a far higher solvency margin than was required for the specific case of India and particularly the Life Insurance Corporation, where the margins have been provided by the policyholders. Solvency is basically a margin that is required to protect the claim, the risk of claims arising in the future. And that is the role of the solvency margin. Now, in the case of LIC and in the Indian insurance scene, this is what happened was that the IRDAI simply picked up what was available in Europe and particularly Australia, if I remember right, and fixed this at 150%. Now, it neither took into account the fact that the LIC's assets were based on book value, nor the peculiar nature of the LIC's operations in India, which were fundamentally based on resources mobilized from policyholders. Neither of these two things were taken, and instead it was a blanket thing. And what Mr. Amanullah Khan referred to was also the fact that the shareholder has not put in any money into this building of this solvency margin. So if the policyholder has funded it, he has a legitimate claim on this, what he has contributed, including a bonus on top of that, because that money has been with the institution for a prolonged period of time. So these are some of the things that I think the recklessness with which the Insurance Regulatory Development Authority of India has acted, particularly in being harmful to the interests of LIC. This is one more illustration.
No, in fact, there is a history behind this solvency margin. When the IRDA asked that LIC has to fall in line with the regulations of the IRDA, LIC resisted it initially because it said, when there is a government guarantee on the policies of LIC,
yes,
why there is a need for the solvency margin? So this was argued, but IRDA did not agree with that, and the government also went with what the IRDA said it. Secondly, LIC also asked that solvency margin has to be there from the time the IRDA regulations came into force. But IRDA wanted LIC to provide the solvency margin of all the policies that it sold prior to the opening up of the sector. And that is why the solvency margin of LIC is so high. So IRDA, because we had campaigned that the entire intention of IRDA was to ensure that the surplus distribution is reduced so that the private sector becomes more competitive.
In fact, one more additional thing is that the solvency margin in the Western world is based on mark-to-market principles. That is, assets are valued at the prevailing market rates. Whereas in the case of LIC, these are at book value, on which the LIC books a profit which is far higher. For example, LIC, among its portfolio of equity, it has a stake in every conceivable Indian large corporate it owns shares. It would have, say, brought 20 or 30 years ago shares of Reliance. No, but it is booked at the asset that is there in the LIC's balance sheet is booked at book value. And only when the profit arises, it materializes in a different way. So the solvency margin is already at a very, very prudent and very, very cautious level. This completely was changed. This was completely ignored. The particular characteristics of LIC as the largest life insurer in India was completely ignored when they set about this.
Actually, when I see this LIC IPO, initially it looks very ordinary, only 10%, 20% and all that. See, we got a proverb in my language, Telugu, that if you're sitting on a mat and there is some cold water is creeping under that, you would never know till suddenly it wets your clothes. So now you will see the first dent on the LIC, it will slowly permeate. And literally you're handing over policyholders' money to others. So my request is, I think I see from the chat box, a Tamil version is ready. We are trying to translate this into regional languages. Our objective is to reach out to the policyholders. So I would request all our friends here, press, everybody, we're all policyholders in a way, indirectly. Please kindly convey the message to the policyholders of India that you are being kept in the dark and your savings are being given away. And all this is being done unilaterally and without any democratic process. This is a message I think it should go very clearly. So I don't see many questions here. So if that is if there are no questions, further questions, I would request Professor Dinesh Ebrol to conclude the.
No, firstly, thank you very much, all the friends who have been able to join us. We are grateful. And I think we have had an excellent exposition from Sharmaji, Sridhar, as well as Amanullah Khan. Three of them have really elaborated all the concerns which the People's Commission have. And then we've been also seeing some of the comments from Rajaji, the convener of People's Commission. And initially, Thomas Franco brought out the work that People's Commission has been doing. And of course, that work will continuously be shared with you. That is our promise. And we followed up on privatization of public sector through a report already, which has been shared. And more such reports on electricity sector, CEL, and LIC are available now, going to be, some of them would be available by the end of the next week, certainly. This point with regard to LIC, I just want to add only one dimension, which is that government is wanting to disinvest from public sector, but it is investing in Vodafone, that to support, a company, Aditya Birla's company, because he asked for this particular help from, and then they've been willing to help. And they are investing hugely in that particular company. Why are they, disinvesting from LIC and investing there as far as is concerned? So whose interest they are protecting is very, very clear. This question needs to be asked extensively in the parliament, in the press, etc., when they are really playing with both strategic sector as well as the people's welfare related institutions. And LIC is a jewel, which I think hopefully our friends in press would bring that out, that why it is a jewel, and it's been elaborated so well. So thank you very much, friends. We look forward to getting more coverage from you, and any questions which you have, the numbers are available. You can contact us back. I just now got a phone call from one friend that there are certain questions which they are wanting to get clarifications on, and I think that friend is there in this particular press conference, but they want to have a phone call. More friends such are welcome, and whether E.S. Sharma ji, Amanullah Khan, Sridhar, all of them would be available to answer questions on LIC. Thank you very much, friends. Very grateful we are. Thank you. Please.
Thank you. Do we close the meeting now, or?